Good morning, everyone, or good evening, wherever you are in the world, because I'm realizing now that we have an international audience now, which is really, really cool. We have people from China, we have people from Africa, we also have people in the EU and people from Canada. So this is really, really cool. And it is just astounding that, so many new investors are coming onto this channel. So again, I appreciate everybody. Let me get my coffee going and then we'll be covering the news. There's so much. This stream is going to be kind of all over the place today because news is just kind of wild. We're going to be covering just a little bit of crypto. There was some really cool crypto news that came out that I think is going to surprise a lot of people. It absolutely surprised me. We'll be talking a little bit about Nvidia, all right, and what's going on with them. We also have something for OpenAI. They were in the news and they're making some moves, and I think they're being kind of hush hush about it. We also have Ray Dalio, who's a very legendary investor. He started up the firm Bridgewater Associates. As a matter of fact, he wrote a couple books, one being Principles. So if you've never heard or read that book, he has a YouTube channel. He goes over a lot of that stuff. He talks about how the economic machine works. Really fascinating video, fascinating individual. Definitely someone we want to listen to. He's kind of a doom and gloom predictor, but it's just great to hear his insights, all right? We'll be talking about the bond market. And I know bonds are kind of boring, right? Who likes bonds? Just bonds are boring, right? We want those higher than normal yields. We want stocks that grow. What's a bond, right? But it's very important, especially to the United States. So we'll be covering the bond news because that Moody's downgrade had a bigger impact than I think, the market led on, right? The market, as soon as that Moody's was dropped, everything kind of just recovered real quick, but we'll be covering that here in a second. All right, guys, let's get started. All right, so portfolio value. We're going to start here today. Welcome, Alex. Yep, hit that like button, guys. I appreciate it every single time. All right, don't forget to hit that like button. I do appreciate your support. Okay, so here's the portfolio value today. Again, and net annual income doesn't really matter because this changes, fluctuates with every dividend payout. This is not true. I think I'm already past this number. Here's the dividend yield on cost. Okay, for the portfolios, I will do a portfolio roundup at the very end of the stream. So stick around if you want to just see, what's going on with those portfolios. But I am down, I think, $28,000. So I was down, something like 12,000 at the beginning of the week or on Friday. And then now I'm just down really hard. And it's mostly because of the large REIT sell-off that we had. REITs have been getting sold off pretty bad. Market, again, just not loving them. We had the bond rout that just occurred this week, and that sent real estate stocks just tumbling down. But not a big deal. We're going to buy and hold like we always do, and, just keep on trucking on. All right, so we had I keep calling it the All-American, but it's the American Association of Individual Investors come out, right? So they ask this question every single week: what direction do all AAII members feel the stock market will be in the next 6 months? And right now we are looking very bullish, right? It's kind of split in the middle between bearish and bullish. So this concluded earlier this week. So they do a survey every single week, and I like to just cover just to kind of get an idea of where the market is, what's their thoughts, right? But people are starting to feel a lot more bullish with this latest, and we're going to get into this with this latest bond route and this latest, tax spending bill or the new, big beautiful bill coming out. I think we're probably going to see a change in the winds, and probably not for the better, but we'll see. Again, we'll see. It really depends on, how this administration is going to sum more money, coming into the United States, right? More investment, that kind of stuff. All right. Let's move on, guys. So first up is going to be the Moody's downgrade. And again, I got to rehash this. I know we already covered this on Monday. We already talked about it, but got to bring it up because this week it was just bad, right? It's all because of this. There was a Treasury bond sale or auction that occurred this week, in case you didn't know that, right? There was an auction that occurred this week. And because of this Moody's downgrade, we had a horrible auction. All right, so let's get into that real fast. And it's funny, I showed you guys this video earlier in the week on Monday, and Tom Lee 100% called this. So it's kind of crazy. Let's just listen. It's only going to be about a minute or so.
Today's pullback comes after a standout week for the bulls, of course, which saw the S&P jump more than 5%. Joining us here at Post 9 is Tom Lee, Fundstrat Global Advisors Head of Research and Fundstrat Capital CIO. Happy Monday, Tom. Good to see you in.
Yeah, happy Monday.
You really haven't been unnerved by anything since Friday night, have you?
No. I don't know if there's much signal in the downgrade Friday, because I think the first AAA downgrade was signal from 2011. I don't think Moody's had any information that we didn't have on Friday afternoon. So I think markets should realize the bond market largely priced in the fact that the U.S. is really not AAA anymore. So I'd be viewing this as a buying opportunity.
That said,
All right, so this again, Moody came out with the report. Everyone's like, oh, whatever. We already had Fitch and S&P Global already tell the world that they downgraded the United States credit rating. So now Moody's comes out, much later and says, hey, we're also going to downgrade them. It's like, okay, we already knew that the U.S. had a bad credit rating, but let's move on.
You're not discounting the notion that the vigilantes have been reawakened a bit?
I think everyone should be aware the U.S. has an unsustainable path for debt, but I think the
$36 trillion in debt. All right, just keep that number in the back of your head. The United States has $36 trillion in debt.
real signal will be when an auction fails. That happened a few years ago, and then we realized that was the time to really pay attention to the fact that we have debt sustainability issues. But I think it.
Boom, right there. He said if we have another auction failure, then that is a clear sign that the United States has a problem with debt, right? We can't wean ourselves off of debt. We're used to cheap money and printing money and, just easily accessible cash, right? That's just the United States. That's how we are where we are, right? I see we have G-Bro in the chat. Hey, welcome back, man. Appreciate that. And I see we have Latro. Welcome back, man. Hello from Texas. Well, hello from Thailand, all right? All right, let's keep it going, guys.
Downgrade itself, I don't think it is much signal.
So we reclaim the 200-day. Is that a clear path to a new high, as some of the trading desks suggested this morning?
Yeah, in fact, I think today will be an interesting test. I'm assuming today's...
All right, so basically we opened up Monday in the red, and then we just climbed all the way back to the top, clawed our way back to the top, and then kind of ended flat for the day, which was nice, right? Wasn't quite red, wasn't quite green. So, good on Tom Lee for calling this, but he also, and we're going to go into just one more video of his, and then we're going to talk about this bond thing and this auction thing. All right. But I know a lot of people like to hear good news. So we're just going to cover, some good news, or at least what I think is good news. And this is just, Tom Lee's prediction of, this new rally that we're about to enter. All right. So let's have a listen.
I do think we're close to making an all-time high, and I think there's plenty of fuel for that. First of all, Bitcoin, which is a leading indicator for stocks, made an all-time high today, and that's 1 month ahead of the S&P. Bitcoin peaked in January 20th of this year at 109,000. The S&P peaked 1 month later. Also positioning, this is from the fund manager.
Speaking of positioning, all right, well, first let's go back to this, all right? So Bitcoin just reached its new all-time high of as high as $111,000. Absolutely crazy. I see we have CP4 in the chat. What's up from Vegas? Well, hello from Thailand. All right, so we see that we have this new Bitcoin high, and he's saying that, based on the S&P 500, that we should start seeing a new all-time high because of Bitcoin, right? Because of investor sentiment, very bullish on Bitcoin. So, that should reflect in the markets, reflect in the S&P 500. All right, so let's move on.
Later. Also positioning, this is from the fund manager survey. You can see investors are underweight U.S., by 40%. It's a consensus underweight. I mean, to me, that's bullish.
So again, I just want us to look at this graph. All right. So investors are underweight US, and they're mostly in Eurozone, right? They all flock to Europe. They're getting, some better returns than what the S&P generally has given people. But I also want people to look at this cash. Look how much cash these people are holding. All right. They're waiting for something. All right. And this is what he's going to kind of allude to here in a second.
Hedge funds are adding to their short positions this week, the largest increase in the last decade. That's another sign. And of course, the reason I feel like the April lows hold is because we had stocks move, see the VIX move above 50 and then fall below 30. As we noted, that has marked 3 of the last 3 bottoms definitively. And it makes sense. When the VIX surges, investors have to de-risk, but then as soon as VIX settles down, they get to re-risk.
Right. So really just interesting perspective, you know, coming from Tom Lee. And again, is anytime he talks about something, I always like to listen in. Again, he's you know, one of those Wall Street pundits. You know, he also is CIO, I guess, or something like that, Chief Investment Officer for you know, FundStrat, and he manages the whole Granny Fund. GRNY, I think is what it is. Has a lot of exposure to Mag 7, but he's like a perma bull. So I always like to just listen in. It's always good to have that view, especially when the market is, you know, taking a dip or in a lull. But it's not bad to also kind of balance that out with some bearish news, right? Because we still want to as investors, we still want to at least understand both sides of the argument, so then we can come somewhere in the middle and make our own educated decision. All right. All right, so stocks end the day flat despite lingering worries over bond market and Trump's agenda bill, which, by the way, got passed in the House, so now it's headed to the Senate. All right, the fear is that the government will continue to ignore rapidly expanding debts and deficits. All right, so here's the article. The bond market cooled slightly on Thursday after surging earlier in the day, fueled by a House vote approving a multi-trillion-dollar spending and tax cut bill sought by President Donald Trump. The 10-year Treasury climbed as much as 4.63%, its highest since last February. The 30-year Treasury note, all right, which itself previously climbed as high as 5.14%, levels not seen since 2023, and before that, 18 years prior. These are really, really bad signs of something at larger play here, okay? For us to have to sell these bonds, these Treasury notes at a higher rate is telling us as investors that you know, these larger countries or larger institutions, larger hedge funds, whatever, insurance companies, all that stuff, people buying these Treasury notes, buying these bonds, they want more interest rate, right? They want something more juicier than what the U.S. is offering, right? So there's a little bit of a risk there, right? There's a little bit of a risk there. If I have to trade off, you know, 20 years of my money in a Treasury note, you know, for a 5%, I mean, I wouldn't take that. I don't think you would either, right? Because there's a stock market, meaning that it can go higher, right? We can see new highs. So why would I settle for a 5% Treasury note, right? You guys got to juice up that return a bit. So that means that the United States is issuing out more debt at a higher yield. That is not good. That is really not good. All right, stocks were little changed while Bitcoin sustained near all-time highs of $111,000. The fear is that the government will continue to ignore rapidly expanding debts and deficits, although the Trump administration has portrayed the spending bill as a means of sparking economic growth that can boost federal revenues. Third-party analysts, including the Congressional Budget Office, blah, blah, blah. Basically, we are on a unsustainable trajectory for debt. Okay. This is why, you know, President Trump has been on this tour around the world, trying to sum up business, trying to get a lot of investment into the United States. I think I saw an article, we're sitting at somewhere around 9 trillion, maybe $8 trillion worth of investment coming into the United States, you know, but out of 36 trillion, I mean, that's okay, I guess, but still not, you know, still not the best. We're still spending a lot of money. Okay. So just keep this, again, this is all just keeping, just data points. All right. This is all just data points for you as an investor, right? That track itself is, by Treasury Secretary Scott Bessent's own admission, already unsustainable. Okay. The United States is already on track to continue spending more money. This is why there's this whole thing about bringing the deficit down, bringing manufacturing here, more businesses, all that good stuff, right? And then the whole tariff game as well, the whole tariff around the world, all that stuff is coming into play here. Thursday's bond market moves come in the wake of an unexpectedly poor Treasury auction Wednesday that had also sent U.S. borrowing costs higher, the Treasury yields. And it follows a downgrade of the U.S. debt last week from AAA by Moody's, which said the U.S. fiscal picture continues to deteriorate. All right. So it's just getting absolutely wild out there. It's just getting crazy for finance land. All right. So moving on, investors dumped bonds globally as the U.S. credit downgrade. So maybe this whole Moody's thing was not a big deal for U.S. investors, but it was certainly a big deal for every other country out there that invests in the United States, right? That buys U.S. bonds and treasuries and things like that. So that was obviously a big deal. Plus, we also have the whole tax bill moving through. Well, it already completed at the House. It was passed by one vote. So now it's moving to the Senate, right? It's basically an extension of the TCJA. I forget what the full acronym is. It's like the Tax Creation Jobs Act, I think is what it was. I forget what the T stood for. But anyways, basically a global bond sell-off is accelerating on the heels of the U.S. Treasury's rout. Markets do not find Trump's big, beautiful tax bill beautiful at all. Unease is worsening fiscal trajectories. Okay, so let's get into this. A sell-off in global bonds is accelerating as Moody's downgraded the U.S. credit rating, and President Donald Trump's tax bill has brought investors' fiscal concerns globally. All right, so yes, the United States, we looked at this Moody's downgrade, we're like, whatever. But again, the rest of the world, not so much. Events such as credit rating downgrades or budgets that risk expanding deficits, i.e. the new tax bill that's getting passed, there's two camps. One camp is saying that this tax bill is going to increase, the deficit, increase federal spending, increase government spending, which is going to put the United States further into debt. All right. Events such as credit rating downgrades or budget that risk expanding deficits tend to bring fiscal concerns front and center of investors' mind, forcing them to reprice long end risk. All right, while Trump was unable to sway GOP dissenters to support his broad tax bill that could drive U.S. debt higher by a projected $3 trillion to $5 trillion, it appears to have triggered a global bond rout. Investors don't really have much love for long duration bonds right now, and I wouldn't blame them. I mean, again, why would I invest in treasuries? Right? Or why would I invest in the United States? Those treasuries, historically have never default. The United States has never truly defaulted on this stuff, but it's possible. It's possible, right? Especially when you have the United States. I don't think I highlighted it here in this article. Especially when the United States is spending way more on the interest payments than it is on anything else. All right, so we're gonna talk about that. Markets do not find Trump's big, beautiful tax bill beautiful at all, said Vishnu Varathan, a managing director at Mizuho Securities. USTs were beaten up in an ugly sell-off. So Mizuho Securities, I like to listen to whenever they publish something. Again, just a reputable, a reputable manager of sorts, I guess. I don't even know. I don't think they're a hedge fund or anything. But I like to, every time I see them in the news, I like to just cover them. So Ray Dalio, I hope you guys know this name. Ray Dalio, very, very famous investor. All right, very legendary investor. He runs and started up Bridgewater Associates. He's basically the father of the chicken nugget. Yeah, believe it or not, the father of the chicken nugget. He worked with McDonald's way back in the day to help them figure out these futures contracts for grain, chicken feed, basically. And this is, eventually the chicken nugget came from this deal, right? This structure that he had created for them. So again, shout out to Ray Dalio, but he has a couple books, a YouTube channel. Definitely check his stuff out. He has a video called How the Economic Machine Works. Really worthwhile. He also has another video called The Changing World Order. Absolutely worth it. It's basically what we're experiencing today, right now. He's talking about China and the United States, at this point right now where we could potentially face a new global superpower, right? So this is the whole thing with the tariff thing and the tariff game and, moving all this manufacturing in the United States. Again, I think there's a bigger picture from all of this, right? The United States is posturing for something. So again, it's just fascinating stuff to learn about and understand what's going on in the broader world. So anyways, billionaire investor Ray Dalio on Thursday sounded another alarm soaring U.S. debt and deficits, saying that it should make investors fearful of the government and bond market. I think we should be afraid of the bond market, Dalio said at an event for the Palais Media Council in New York. Rising financing costs, basically Treasury yields came out at 5%. Nobody bought them. So now we had to up that yield, right? We had increased that yield for those treasuries just to entice investors to buy. Rising financing costs, along with continued spending growth and declining tax receipts, have combined to send deficits spiraling, pushing the national debt past the $36 trillion mark. All right. In 2024, the government spent more on interest payments than any other country, than any other outlay other than Social Security, defense, and healthcare. And guess what we're spending more money on? We're spending more money on defense. All right. This is absolutely just crazy. I think with the Golden Dome initiative, plus all the money that's going into the military, into the defense sector, I think it's already at about $1 trillion. So it's just getting, again, we're just spending more money like we usually do. Dalio said he's not hopeful politicians would be able to reconcile their deficits and lessen the country's debt load. Basically just, red, blue, they're fighting. And I know, politics intersects with finance, but again, on this channel, we try to avoid that as much as possible. Your views are your views, and we believe what we believe. All right. House members approved legislation that lowers taxes and adds military spending. The bill, which now goes to the Senate, could increase U.S. government debt by trillions of dollars and widen the deficit at a time when fears of flare-up in inflation due to higher tariffs already weighing on the bond prices and boosting yields. All right. Dalio goes on to say, I'm not optimistic. I have to be realistic. All right. I think it's the essence of the challenge of our country that anything related to bipartisanship is getting over political hurdles, essentially means give me more. Along with that, right? Along with this point, Dalio, I like Dalio. I really do like Dalio. But he is a doomer, right? He always talks about the worst case scenario. And when you're running something like Bridgewater Associates that has not only advised countries on how they should build their economies or structure, their banks and debts and things like that. I mean, you have to kind of take that gloomy look all the time because you're managing, billions and billions and billions of dollars. So you kind of always have to look at the risk and always kind of be a perma bear in this sense, because it's only going to protect your thinking. It's going to protect you and your investors. So I just think it's a fascinating point for Dalio to come out and say all of this. Again, I like Dalio. I like his books. Recommend anyone take a look at them if you have the time. They are very, very extensive books. All right. Anyways, let's move on. Let me check the chat real quick. I see we got a lot of chat in here. Let's see. Oh boy, some people putting 50% on Palantir. That's what I'm talking about. ST7 Sango. I don't think I've seen you in the channel, so welcome. Let's see what we got. China says U.S. dialogue to continue as Beijing hints trade talks are advancing. Hey, we got some good news. Look at this breaking news. All right. Let's see what else we got in here. Latro, Michael Curry. Actually, that means the American market is not safe bet or attractive anymore. It was never about the yield. Good point. Good point. All right. Welcome, Michael Curry. I don't think I've seen you on the channel, so welcome. ST7 Sango says better returns on the Strife strategy. So funny enough, we're going to be covering that here in a second. CP4 says shout out to Ray Dalio, investing if you are already wealthy and just trying to preserve wealth. Exactly. That's exactly it. That's exactly the thinking too. He's already super wealthy. So now he just has to keep it and not lose it, right? Not yellow in something like a Bitcoin or a GameStop. Awesome. All right, guys, let's continue on. So Nvidia in the news. Okay. Nvidia, you guys know I have a pretty decent, it's like $26,000 investment in NVW, which is, a ETF that tracks Nvidia. So anytime I find news about Nvidia, I like to cover them, especially since I'm very bullish on the whole AI thesis, being here easily for the next 4 years and into the decade. All right. So, President Trump he completed his, I think it was last week or something. He completed his whole Middle Eastern tour. He went to the UAE, he went to Qatar, and he went to Saudi Arabia to drum up investment for the United States. Alternatively, he also got a lot of companies, some big deals. One of them being OpenAI, Nvidia, and Palantir was out there, right? Alex Karp was out there. And then you also have AMD, who's going to help build, some of these data centers in Saudi Arabia and things like that. But there wasn't much news that came out of UAE, right? There wasn't a whole lot. There was a lot of news that came out from Qatar and a lot of news that came out from Saudi Arabia, but not so much the UAE. And it was kind of questionable. It was like there wasn't that much good news. And I was wondering, and I saw, or I think it was a video or an article that basically said that the UAE kind of notorious for having shell companies, Chinese shell companies, where they will buy stuff, i.e. chips, and then sell them or send them off to China, right? There's export controls on Nvidia chips. So that was kind of interesting to hear, or a perspective. But let's read on. Okay, so in January, OpenAI CEO, again, all these major companies started Stargate, right? And for those who don't know, Stargate project is just a $500 billion initiative to build on artificial intelligence infrastructure in the United States, right? They're completing their first Stargate data center in Abilene, Texas, and I think it's coming due fairly soon. United Arab Emirates-based G42 said on Thursday that Stargate UAE is a next-generation AI infrastructure cluster that will run in the newly established 5-gigawatt UAE US AI campus in Abu Dhabi. Okay, so this campus is pretty freaking huge. They showed a picture of it. I didn't grab a picture for this stream, but it's just a massive, like, I don't know, just massive land with a bunch of data centers, a bunch of power stuff, and it's just cool. It's crazy. It's crazy. I'm losing my mind here. But anyways, it's really wild. Stargate UAE and a 1 gigawatt compute cluster will be built by G42, operated by OpenAI and Oracle. All right, the collaboration will also include Cisco, which will offer zero trust security and AI-ready connectivity, and SoftBank Group, as well as Nvidia, which will supply its latest Grace Blackwell GB300 systems. That is the interesting part here, is the new Blackwell GB300 systems, right? Because this is going to be their premier chips that they're going to be sending to this cluster. Again, even to sell chips to China, they have to kind of downgrade the chips that they have, right? That's where you get the H20, right? The Hopper. It's a kind of a stunted Blackwell, but the Blackwell is their premier chip offering at this moment, and they're going to be able to send it to the UAE. So again, some big deals were absolutely made during their visit. All right, the first 200 megawatt AI cluster is expected to go live in 2026. Again, this should be viewed as a bullish sign for Nvidia, that their demand for Nvidia chips is going to continue. And this whole notion of data center demand going down, and Nvidia chips are not going to be as in demand because everyone's making their own. I think that is not a great bear case, in my opinion. All right, not a great bear case, but again, you guys be the judge. That is entirely up to you. But this is a huge bullish signal for me. All right, Nvidia may top Q1 estimates, but its outlook could be hindered by China. All right. Again, the whole export control, they can't send their chips to China. They have to, not only do they have their own specifically designed chips that they could send to China, the H20. Well, now in order to get around this license and export controls, now they need to downgrade this H20 even more, right? And that's exactly what Nvidia is doing. They're trying to do, and they also open an office in China. They also open an office in Taiwan, if I'm not mistaken. Nvidia is set to report its fiscal first quarter results after the trading, or after the close of trading on May 28th. So I'll be looking for that, and we will do a review once it's out. Production of the flagship GB200 rack scale systems appear to have moved past their initial growing pains, Schaefer wrote in a note to clients. We believe the Blackwell 200-300 equivalent volumes still on track to meet or exceed 40,000 this year. We see GB300, which is their flagship premier one, on track for seamless third quarter debut. The top 5 hyperscaler customers make up 50% of sales. All right, the hyperscalers he's talking about is Google, Amazon, Tesla, Google, Microsoft, and I don't know who the fifth one would be, but those are pretty much it, right? Maybe Apple, but I don't see Apple. Facebook as well is up there, believe it or not, but Meta is actually considered a hyperscaler. So yeah, all these, basically the Mag 7, right? These hyperscalers, they're still purchasing a lot of Nvidia chips. All right. Schaefer, who reiterated his outperform rating of 175 price target on the stock, said Nvidia is still the best positioned company to capture artificial intelligence upside as it benefits from having a full stack with both hardware and software. He's referencing the whole CUDA library that Nvidia has and a unique rack level approach. All right. So really good times for Nvidia. I still think we're very early. I missed the whole run up from 2020 all the way up to, well, really 2018, when people were using the whole Nvidia chip for Bitcoin mining, and that sent the stock up. But I missed the whole run up from basically 2018 all the way up to 2024, I guess. So I'm not missing this one. This whole AI thing, big. This could be really big for Nvidia, right? And their chips are just the best on the market. They own the market share when it comes to artificial intelligence chips. All right. So moving on, we got our boy. Speaking of strategy, all right. Strategy announces up to $2.1 billion at the market preferred stock offering. All right. So they're adding on more debt, raising more cash so they can buy Bitcoin. MST or Strategy on Thursday, a sales agreement to issue more shares of its 10% Series A perpetual Strife preferred stock worth up to $2.1 billion in an at-the-market offering. The world's first Bitcoin Treasury said it expects to make the sales in a disciplined manner over an extended period. The net proceeds are intended to be used for general corporate purposes. This is what worries me. General corporate purposes, including the acquisition of Bitcoin and working capital. Okay, so real quick, let's talk about it. Strategy, again, their software company, you might as well write that off. It doesn't make money. It's dead, right? The only thing propping this company up is Bitcoin. They've been issuing out a lot of equity, which could be seen as a good thing, right? So you're issuing out equity. So they're using that money that, investors buy their stock and then they go out and buy Bitcoin. Then they came out with this whole Strife, right? And Strike, and they have their convertible notes through BMAX, which is through REC shares, right? So they have all this debt coming in, but how is the company actually making money? That is the $1 million question that I can't find an answer to. Their software company not really making money, right? And they need that money to keep the doors open. So how is this company actually making money? And this is why there's a huge belief that this company, Strategy, MSTR, is a massive Ponzi scheme, right? Eventually, it's going to come tumbling down. The house of cards is going to fall, right? Because how can they pay this 10% yield on a preferred stock when they're not making any money? That's the big question that people keep bringing up. How are these people able to pay this thing? They're not selling Bitcoin. Their software company is not making any money. So I don't know, guys, you be the judge of this, but they have so much different ways that they have raised debt. They're convertible notes that you and I could not invest into, right? It was only allowed for institutionals, and they, can hold these convertible notes. They redeem, 2026, 27, 28, 29. These will convert into MSTR shares, right? So retail could not buy these things. You and I can't buy them. And then here comes REC shares. REC shares, ETFs, they have AIPI, is a very popular high income ETF for artificial intelligence. They came out and said, hey, we got BMAX. And BMAX allows investors like you and I, retail, to invest in these convertible notes, right? It doesn't pay a dividend yield or anything, right? You're basically holding and just hoping that Bitcoin will go up. And then when these notes get redeemed, or converted, they get converted to a higher share price of MSTR. That's basically how it works, right? Then you have the Strike and the Strife, and these are basically sit higher on the capital stack. So in the event that Strategy was to ever go bankrupt and go down into the ditches, you would still get paid back your money at a minimum, right? And then of course you have the regular MSTR shares. But again, this Strike is like the Strife, how are they making any money? To pay out this really juicy dividend. So again, all very interesting. I'm not saying I'm bearish on Strategy. I actually kind of like them. I am looking more into them. I am listening to other, financial pundits, analysts, things like that, and getting their perspective of it, because Strategy did position itself to weather a 5-year, Bitcoin bear market. That's really how they're kind of structured themselves. I haven't found any evidence to support that. It was just, commentary by an analyst. But if they're continuing issuing out debt, because this is exactly what this is, preferred shares are debt. If they keep offering this debt at a 10% yield, where the hell is the money coming from? So again, that's just my question. That's what I keep trying to find out. Like, how are they generating this? And they talk about this Bitcoin yield, right? MSTR does. You and I, we all know that Bitcoin does not pay out a yield. So it's, again, more research, more stuff I got to look into. But, very popular stock, very popular ETF out there. You have Misty from YieldMax. You have MST from Defiance that just came out, which is a 1.5 to 2x levered, ETF. And hopefully in the future, we get something from Roundhill, something one day, crossing my fingers, we get something from Roundhill for MST. It should be MSTW in the future. But again, I'm not bearish or bullish on strategy. I really like the idea because, again, institutions, fund managers, they usually have to follow a charter or something that says that what they can invest into. Since they can't hold cryptocurrencies or they can't hold Bitcoin directly, they will go the ETF route, or they can invest in strategy, which is a leveraged, position on Bitcoin, which is, again, kind of interesting. So imagine if you stack on 1.5x leverage, using MST, now you're just increasing that leverage, right? And now there's other ETF providers that want to come out with their own versions of that. So again, you're just stacking leverage on leverage on leverage. At some point, the house of cards is going to come tumbling down. So we'll see what happens. All right, guys. Just checking the chat real quick. ST7 says, I wonder how overbought Nvidia is. That is a good question. That's a good question. I for sure don't know. I just keep buying. But right now, truthfully, I am holding still. Latro says, you can hedge Nvidia with dips, which has a 58% yield. I'm out on longs, or I'm out of longs. Oh yeah, Latro, man, you've been posting some of your crazy moves, man. You're a madman. But Latro, I see you're positioning yourself for, a possible long, pullback, a very bad pullback. Let's see what else we got. ST7 says, valid point. I don't see how Strife could pay a 10% guaranteed yield annually, which is also why they have this lawsuit going on, because, this lawsuit is going to be crazy. I think this is going to get ugly for strategy unless they settle. And if they settle, here's the bigger thing. If they settle, right? Because Michael Saylor, he had already went through a lawsuit some years ago, and he had to pay out like, I think $40 or $50 million, but that's when strategy was still a software company and making money. But now that 40 or 50 million, where does it come from? Is he going to have to, issue out more MSTR shares in order to pay off a lawsuit? Or where's this going to come from? Is he going to have to sell some Bitcoin, sell a couple Bitcoins in order to get, again, it's just very, very interesting where this money is coming from. Anyways, let's move on. Apple, Tesla, Nvidia said to be offered as tokenized stocks for crypto. This is really, really crazy. This is new technology, a new way of investing in stocks, not so much in the United States, but it's going to be more so for outside of the world. This is basically bringing the US stock market to the rest of the world, and it is absolutely baller. It is so cool. All right, crypto exchange Kraken is planning to start offering tokenized versions of Apple, Tesla, Nvidia, and other high-profile stocks for its non-US customers. According to media report dated Thursday, a move that would further blur the line between traditional finance and digital assets. Man, we're already far past that blurred line, all right? It's foggy, it's muddy at this point. But again, I think this is a good thing because this is, the whole, SEC deregulation of the crypto industry. I think this is a product of that. I think this is a result of that, right? These so-called tokenized equities give non-US Kraken users easier access to US stocks with 24/7 trading that continues even when the US markets are closed. Global firms are increasingly embracing tokenized assets drawn by the promise of lowering trading costs and greater transparency than legacy systems offer. Tokenization involves converting real-world assets, property or stocks, into digital tokens that exist on a blockchain. So I've seen in the real estate world, there's a website. I don't recommend it, of course. I'm not embracing them or anything, or sponsored by them or any of that. But it's called Realty, REALT, and this is tokenized real estate investing. I thought it was fascinating. But basically, they'll go out, buy a house, right? Or they'll go out, get a house under contract, raise a bunch of money through their tokens, right? And then you as an investor, you can invest in those tokens, which is a direct investment in that real estate, right? So you can be a rental property owner. And then the thing that kind of blurred the line for me was they were like, oh yeah, we promise weekly payments. I'm like, this ain't no high yield ETF, man. This is real estate. You get one rent check a month, and that's if you get that rent check. So it's just very interesting. But tokenized stocks is really, really a great idea. And I think it's bringing the US stock market to the rest of the world. Like that is crazy because a lot of people want to invest in these stocks, but they got to jump through hoops, right? They got to jump through brokerages. They got to jump through fees, transaction costs, all this stuff. If Kraken is the first to the game to be able to do this, I think this is going to I think this will be a good headwind or tailwind for Kraken, but also for the U.S. stock market because now you're going to have more money coming in, right? So that's just really, really cool. U.S.-based Kraken is planning to tokenize more than 50 stocks and exchange-traded funds such as the index, the S&P 500, the OG. The tokens, which Kraken is calling X stocks, will trade on the Solana blockchain. All right, I'm not going to say that Solana coin is going to jump 100 or 1,000% tomorrow, but I don't know. You guys tell me. I'm not a crypto guy. I don't know if this will impact the Solana coin at all. Each X stocks token represents a real share with backed finance. All right, Kraken's partner company. I think they spelled backed wrong. This should be 2Ks, right? And I think it's a D. Yeah, backed finance. Buying the actual stocks to back the tokens. So they're going to buy the actual stocks. Well, you're going to buy the token and the token's going to actually own the stock, right? So that's really, really cool. The move leaves Kraken in deeper competition with stock and crypto trading app Robinhood, which is reportedly working on a blockchain platform to let European-based retail investors trade U.S. assets like equities. So if anyone wants to go long hood or maybe do the cover call ETF version, and you like the stock, maybe this might be an opportunity. All right. So last bit of news, we'll check the poll, the chat, and then we'll move on to the last segment, which is market updates, and then we'll talk about the portfolios. So Crown Castle International, I keep calling it international. Crown Castle, which is a real estate investment trust, cut their dividend by 32%, all right, down to $1.06. This sucks, but especially if you own Crown Castle, which I do. However, this was due because they sold their fiber business, and they mentioned that this would happen back in April, so this was not really a surprise. All right, this is a result of just the market going down in general, V&Q, the entire REIT market going down. Had they announced this and not made it, apparent, or even, didn't sell their fiber business and then they cut their dividend, oh man, investors would have piled out of Crown Castle. Crown Castle is a cell tower REIT, so they're mostly known for their little mini cell towers that are in really dense locations, like cities. Whereas American Tower, they have those big radio towers out in the middle of nowhere. But Crown Castle really cut its teeth on the fiber business. They tried to anyways, and it didn't go so well. It was cash flow heavy, but it was also CapEx heavy as well. So they had to sell it. They got rid of it. It's not part of their core competency. They were betting big on fiber. Didn't work out. So they ended up selling it. They cut the CEO out. They brought somebody else new in. So hopefully Crown Castle has a good recovery. Again, cell towers completely beaten down. They're real estate, all right, real estate investment trusts, and the REIT market has been beaten down. But AMT and CCI, their near peers, their competitors, they both announced years ago that their growth is going to be extremely muted for the next, probably 4 or 5 years or 6 years now. So that is starting to play out. I still like Crown Castle International. I haven't added to it, but I still really like the company. They're doing what's responsible, and that to me is a big deal versus taking on excessive leverage debt as a real estate company, investing in high capex projects like data centers. They're being really responsible with my money, so I'm all for it. American Tower, they do have some data center exposure, so I kind of get that. That exposure to data centers, right? So that's kind of nice. But anyways, just wanted to cover that in case anyone owns, this old man real estate investment trust, Crown Castle, stock ticker CCI. So with that out of the way, guys, let's hit the poll. So if you hadn't gotten your poll in yet, all right, if you haven't done the poll yet, now's your chance. All right. The question was, during this pullback, are you buying stonks? All right. 50% of you said, hell yeah, stonks only go higher. 28% of you said, nah, I'm keeping my cash pile for now. And then 22% of you said, stonks, I'm all in on Bitcoin. All right. So I'm going to go with the 28%. I'm actually going to try and hold some cash right now, at least easily into the next week. I want to see where we're going, what's going to come of this tax bill. And then not only that, letting the market just kind of digest this whole, bond route that we're going through. Again, investor sentiment just kind of digesting that news. All right. So looking at the comments, Tales of Julio says, I wonder if it might be a good idea to buy some BMAX. Maybe. I don't know too much, really how BMAX is supposed to like increase in value or like, I know when the convertible notes go to MSTR shares, you're supposed to see a higher payout, but I guess you're betting on Bitcoin being at a higher price when the note converts, and then it converts to MSTR shares. So that's what you're betting on when you invest in something like BMAX. CP4 says, I really like what Kraken is doing. I do too. Anything that allows people to invest more, right? Whether it's in the United States, outside the United States, I think is just really good, right? We're coming from this generation that completely missed investing by a huge margin. Just people don't even know what the heck an S&P 500 index is, right? But now with internet just being so readily available, finance channels on YouTube, learning, stocks is just so easily accessible nowadays. But the biggest hurdle is actually being able to invest in those stocks. So by bringing it to the rest of the world, the EU to start with, I think that's a great thing. And, it's just going to be able to allow more individuals to, have better outcomes later in life. So I really do like that. Tales of Julio says, yeah, the RecShares website seems that it will pay quarterly. I didn't know BMAX paid anything, but we'll see. All right. Well, I'll have to check that out again, because last time I checked, I was like, this thing doesn't even pay a dividend yield. So we'll see. Latro, I appreciate that comment, man. Latro says, you do a great wrap up, Eugen. Appreciate that. I really do, man. Thank you so much. All right, let's move on into the markets and then the portfolio updates. Let me end that poll. All right, we got 2 new votes, but sorry, man. We got to end this poll. All right, do appreciate it though. All right, here we go. S&P 500. I know that's small. You guys can't see that. There we go. All right, S&P 500. We are down 4 basis points for the day. We kind of ended in the red, but not bad. It is actually not really that bad. I will take this over a 1% or 2% decline that we could have had the other day. Again, over the last 5 days, we've just been going lower and lower. We're down almost 2%, well, 1.5% for the week. I could take that. I would rather take that than 1.5% for the day. Okay. You guys remember Liberation Day? We were down 10% just on the open. That was absolutely miserable. And those of you who are with me and we're rocking together, we all felt the pain together. So that was just absolutely wild. NASDAQ 100, we are up 15 basis points for the day. All right. So we're ending in the green, which is a little good. Again, it's been pretty rocky. Same thing as the S&P 500 over the last 5 days. NASDAQ down 1.23%. All right. Bitcoin, man, this thing is on an absolute rip. All right. Absolute rip. You cannot stop Bitcoin. All right. There was all this talk of Bitcoin winter, but it seems to have come and gone. Like nobody cares about Bitcoin winter anymore. I don't know. You guys tell me. I'm not a Bitcoin or a crypto guy. So you tell me if crypto winter or Bitcoin winter is still coming, or do you guys think that's just a stupid fad that kind of died off, right? Maybe there's no such thing anymore. I have no idea. There's all this talk of like super cycles and this and that, Bitcoin halving and yada, yada, yada. I don't fully comprehend every single thing. All I know is Bitcoin go up, and if I have money in there, money go up, right? So for gold, we got gold futures. There was a little bit of an outflow. All right, a little bit of outflow, earlier today, and again, no idea why. This doesn't make any sense because people should be kind of bearish on stocks right now, or at least because of what's going on. But gold futures had a little bit of a sellout, and it just ended 7 basis points in the green. All right, over the last 5 days, a lot of people were putting money into gold. So those of you who took advantage of those dips, congratulations. Over the month, looking a little different. Year to date, up, still the best performing asset year to date. As a matter of fact, let's check Bitcoin. Yep, gold is still beating Bitcoin. All right, so congratulations to anyone buying gold. U.S. 10-year Treasury, I think we had enough of the bond talk and the Treasury talk, but you guys can see we are elevated at this point. Not a good sign. Definitely not good. VNQ, the Vanguard Real Estate Index ETF, this is what we use as a barometer to kind of check in on the REIT market, see how that's going. And, surprise, surprise, not going so well, right? Just not going well at all. And year to date, they've almost recovered, almost freaking recovered. I need them to get back above 90. They were sitting at 90 for a little bit, and then they just kind of dropped off. Again, this is just REITs being REITs. I think I really do think that we're going to hit this new period of normalization where we just, as real estate investors, have to accept that interest rates are not coming down as much as we think, right? We're so addicted to cheap money. We're so addicted to low interest rates that we forgot what real, like money is supposed to be. So, we'll see. Because interest rates, before the pandemic happened, interest rates were sitting at, I think, like 4.25 or something, right? And then the pandemic happened and went all to zero. We basically had free cash for 2 years, and then they started raising the interest rate, and real estate investors lost their mind. A lot of real estate investors got wiped out, and we are still sitting on about $1 trillion worth of mortgage debt in the commercial sector due this year. So if we don't get that interest rate down, either they're going to have to just accept that and refinance into whatever the interest rates are, or those that were hoping, praying, and spraying and hoping, because they bought an asset that's not really worth what it is, and they took on all this excessive debt, and they might have they call it an ARM, a adjustable rate mortgage, which is not good, right? They bought it when it was at 2% in the mortgage rate, and now it's up at like 7%. Those people are getting cooked, especially when you can only hold on to that debt for 2 or 3 years. So they're definitely getting cooked. All right. Latro says Bitcoin looking for a local top soon, modest decline, then a blast to 150K. Don't go all in yet, in my opinion. I kind of agree with that too. We're kind of at that, peak euphoria again, like I keep talking about this peak euphoria for the market, after all that good news from Saudi Arabia and everything, the market is just going crazy. So now we're having kind of a lull, kind of a pullback, right? It's supposed to happen, but you're absolutely right. I think, because Bitcoin is reaching this new all-time high, all these people are piling in now. We're like Bitcoin to the moon when we should have been buying when it was $72,000, but people didn't want to lose money. But now people are like, let's buy in now. I think we could probably see a pullback easily in the next week, but we'll see. ST7 says if Saylor keeps buying Bitcoin, it's going to keep going up. I don't see a pullback yet. Interesting take, interesting perspective. Yeah, Saylor just seems to it doesn't matter how much it costs. He's buying it. He's like my favorite supervillain. All right. He's my favorite personification of a supervillain. He's either going to destroy the entire crypto or the entire Bitcoin market when MSTR just flops and, just has a massive liquidation event, or, he'll help create Bitcoin into what it is in the future. I have no idea. All right, guys, let's look at the portfolios. We are at minute 51, and then we'll wrap it up and call it a day. All right. So portfolio sitting at under 100,000. All right. Got kind of cooked this week. All right. It is what it is. But it looks like we keep fluctuating or whatever. It's all due to PLTW. I swear to God. It's like every time I look, it's always PLTW / Palantir. And I'm always looking at, the chart. And I'm like, it's doing that thing again, where in the morning it'll completely go up, and then it'll just flop all the way down. And then it's like a slow climb back up. And then usually I end up, pretty decently, but it's always doing that thing. Right. And I don't know what it is about them, but anyways, no new buys, haven't done anything yet. These are all the equity positions. Okay. Of what they're sitting at. For today's return, again, not too bad, not too shabby. Nvidia made me a little bit of money. Ondas Holdings, they missed their they missed their estimates. Ondas is penny stock, right? I'm not really talking too much about them, but they are a partner with Palantir. They do counter drone. They have counter drone technology, which I think is very fascinating. Ondas Autonomous Holdings, right? So this for me is going to be like a 5-year hold. I'll probably add like $100 here or there, but again, Ondas Holdings, they have a whole thing, but I'm not going to cover them on this stream. And again, doesn't mean go out and buy it. Please don't just take that as, I'm going to go out and buy this thing just because it's a couple pennies, right? Really, it's, I think, sitting at like 87 cents or something. 91 cents. There we go. But anyways, XDTE, XPay still doing their thing. We're up just a couple dollars for the day. Looks like XPay, well, that's because it hasn't updated yet, but XPay will definitely drop. But yeah, that's that for this portfolio. Let's take a look at the M1 Finance portfolio, and then we will call it a day. Lacho says, Sailor will go out with spontaneous human combustion. You'll probably implode, man. And then he turns into this bright white light, and then he goes back into space. Like, all right, here is the portfolio on M1 Finance. Again, REITs absolutely getting cooked here. This was sitting at like $8,000 or $7,000, and now I'm back to 1,000. The technology ETF, the heavy technology ETF I have, Vanguard, from Vanguard VGT. This one is still down close to $10,000. This one was my biggest loser, pretty much because I bought it at all-time highs, and then it just started crashing, and then now we're on the recovery. So I still like VGT. I'm holding it as one of my core positions in the entire portfolio, right? In the total portfolio, I'm just holding it, right? I'm still very bullish on, technology, bullish on AI, bullish on semiconductors, that kind of deal. BDCs just doing their thing, nothing new here. If interest rates drop, I think these will also drop with it. And the reason is because, BDCs, they loan out to companies that can't get those loans from traditional banks. So they're kind of like a proxy for private credit. But they also typically loan out money cheaper than what a bank can. So because these are private institutions, right? Private companies. So I think when interest rates go lower, BDCs will probably have an outflow, and some of the BDCs will probably have their share price decline as well. Crypto ETF, nothing sexy there. It's just IBIT from iShares. It's just sitting there. It's just doing its thing, right? Rises and falls with the market. Like AD Carry, I think I've seen you on the channel before. Have you bought Nvidia stock before the AI boom? No, I missed it. And the reason is because I had this whole notion of like, I'll just put my money in an index. I don't understand technology, as best I should. I don't understand investing in individual stocks. So I'll just go with an S&P 500, right? That'll be my tech exposure. And I was investing heavily into REITs because, my background was primarily real estate. So real estate investing. So single family houses, multifamily apartments. And then, I started moving a lot of the money into REITs, right? So that's where it was. And then it wasn't only until recently, and I mean like probably earlier this year, 2025, when I really started to dive into like individual stocks, companies. And when this whole thing popped off with artificial intelligence, I built like this whole thesis, right? It's a pretty like wild thesis. And I started looking at like Palantir and Nvidia. And these were my two horses that I'm betting on, right? Because Nvidia, when I watched that GTC conference, the last one, and my background's IT, I was like, man, I got to get in on Nvidia. They own the market. This technology is superior to everything I've ever seen. Nvidia is just owning it. And I went with Nvidia over AMD. Not saying AMD is bad or that they can't compete with Nvidia or that you can't make money with AMD, but Nvidia they own the market share for artificial intelligence, right? Then, before Nvidia, I started with Palantir, looking at the Palantir stock, the company, what it was doing, and then the DoD announced their budget cuts. And then Alex Karp mentioned, "Hey, I'm selling my shares," and then the stock just completely dived. And I was like, "This is worth looking into." And the more I looked into it, I was like, they're not just doing DoD government stuff, right? A lot of people think that they're just doing that. It is good that they have a good focus on it because they really are the premier defense artificial intelligence company. They're the only ones really in the space. But this software that they have is very powerful, and it could probably be applicable to other areas, the commercial sector, because you have companies like GDIT, companies like CACI, Raytheon. All they do is government contracts. They're not selling really to commercial. Let's see. Like you and I, we're not buying missiles, right? We can't buy missiles or guided rockets. We can't buy an F-35, so they're tied into the government. As long as the government needs, weapons, then they're going to go to these contractors, right? They're going to go to the Lockheed Martins, the Boeings, and the Raytheons. But what makes Palantir special is that their software can be adopted for commercial use. And once I learned that and pieced that together, and right now at that time they were only in the United States. I was like, once they get into NATO, once they get into the EU, this stock is going to go crazy. Like this company is going to go wild, because then what's stopping them from breaking into other parts of the world? Wherever the United States is operating, they're going to, militarily with partners, those partners are going to have this software as well, right? Partners at South Korea, Japan, Australia. You also have the Five Eyes, right? So New Zealand's a part of that. Then you also have the EU, NATO. I mean, NATO is like a 30+ member, organization. So there you go. You have a huge contract with NATO. So that's how it started for me. I missed the whole AI boom, or I'm sorry, I missed the whole like tech sector run up. The Amazon, the Apples, the Googles, the Facebook, the Metas, all that stuff. I missed all of that. So when I really started diving in, I was like, I'm not missing this AI boom. So this is why I'm really heavy semiconductor, or really bullish semiconductor, Palantir and Nvidia. So I hope that answers that extremely well as best I can. All right. But guys, we are pretty much at the top of the hour. I am going to end this stream. I will join everybody in the Discord chat. If you guys want to have a chat, I'll be there for about 30 minutes to an hour. But yep, I appreciate everyone joining the stream. I appreciate everyone, cutting it up with me in the chat. And of course, I appreciate your guys' support, because without you guys, this channel would be nothing. This channel would not exist. So again, let me just check the comments real quick, or the chat real quick. CP4 says, I like Nvidia and Palantir for sure. Absolutely. That's me all day. North Korea sank a battleship trying to launch it. North Korea and their shenanigans, man. I swear to God, North Korea and their shenanigans. I can go on. I follow international relations and geopolitical, tensions and wars and stuff like that. So that's funny. That's really funny. I like that stuff. Anyways, I have positions in Plady, and Palantir says ST7. Awesome. All right, guys. Again, I'm going to hop off here. I'm going to hop into the Discord. I got some other research I want to get through. So if you guys want to join me in that chat, I will talk to you there. Until then, I will see you in the next video or the next stream. You guys have a great rest of your evening wherever you are in the world, or a great rest of your day. You guys take care, and thank you.